All right, welcome to another Tuesday Tidbit. This one is what is a qualified assumption? So many folks have heard about assumptions before. Finian, can you not clean yourself when I'm in the middle of Tuesday Tidbit, please? Thank you. Uh, so, a assumption is typically on a government loan. A typical assumption is typically on a government loan. FHA, Federal Housing Administration, VA, Veterans Affairs. With those loans, they are automatically assumable, which means a buyer could come along and take over your mortgage and just take it into their own name and continue making payments on that same mortgage. Okay, that's an assumable loan. Most loans are not automatically assumable. So conventional loans, for instance, are not automatically assumable. Conventional loans are backed by Fannie Mae and Freddie Mac. It's very, 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 very rare that you might have a conventional loan be assumable in nature. Okay, most of them are not assumable. Now, just because it's not assumable does not mean you can guaranteed, definitely not get an assumption, but it means you'd have to go with a qualified assumption. So, qualified assumption is where you say, hey, look, I know my loan is not automatically assumable. Fine. But in the cases of divorce or death, and those really are the two instances in which lenders will review qualified assumptions: divorce and death. Okay. Getting divorced, I want to take over the mortgage. Can I do so? Well, with a qualified assumption, potentially. So you'd have to talk to the mortgage loan servicing department. You'd have to probably talk to the special loans department with regards to a qualified assumption. With a qualified assumption, you still have to prove that you can make the payments. So you're going to have to submit along pay stubs and W-2s and bank statements, all of that, just like you were if you're going to get a mortgage originally. But you'd have to do so with the lender to approve a qualified assumption. Hey, can they qualify to take over these payments? For reduced fees relative to a refinance, that lender may be able to grant you a qualified assumption. They're on a case-by-case basis. You have to supply all the documentation, and lenders are really only inclined to even look at it if it's a case of divorce or death. So that's what a qualified assumption is. It's not a very fun process. You're kind of going through a refinancing, except you get to keep your original loan terms, but it's a very similar process. But now you're dealing with the loan servicing department instead of dealing with a loan originator. Okay, so strap in. They're not particularly fun, but if it means you get to keep your low rate, it certainly might be worth your time and effort to apply for it. Hope that helps. Hope that makes sense. If you have any other questions, let me know. Thanks. Appreciate it. Bye.